Hello students, welcome back to the YouTube channel of St. Wilfred College of Arts, Commerce and Science, Panvel. In last lecture, we prepare necessary accounts in the books of Prem Company. In this lecture, we will prepare the necessary accounts in the books of Raj Company. Okay, so see, first journal entry. What will be the first journal entry in the books of old partners, in the books of old company? Journal entries in the books of old firm. First is asset transfer. Then transfer all the assets of Raj to assets. See, what is the assets of Raj? Premises 5,000. Write down. Premises 5,000. Next is next asset. Furniture 7,000. Furniture 7,000. Next asset. Debtors 14,000. Next asset. See the next asset. Next is inventory 8,000. Sorry, inventory 8,000. Write down inventory 8,000. Then next asset, take as it is book value. Bank 4,000, cash 2,000. Bank 4,000. Bank 4,000, cash 2,000. Okay, the first entry asset transfer. Then next second entry is liabilities transfer. What is the entry? Liabilities account debit to realization account. But which liabilities? Only external liabilities, means realization account credit side. Realization account credit side by liabilities. Which liabilities? By external liabilities. By external liabilities. See which external liabilities are given. Creditors 4,000, bills payable 3,000. Creditors 4,000 and bills payable 3,000. Okay, these external liabilities are given. Then next entry. Then next entry, which is the next entry? See in a journal entries. Next entry is purchase consideration due. So do the entry purchase consideration due. See how much the purchase consideration of Raj. Purchase consideration of Raj is 45,300. So do the journal entry. What is the journal entry? Purchasing firm means new firm account debit to realization, means realization account credit side. Realization account credit side by purchasing firm. Which is the purchasing firm? Prem Raj Company. This is the purchasing firm. How much the purchase considerations amount? 45,300. And corresponding effect in Prem Raj Company. Corresponding effect in Prem Raj Company to realization account. To realization account amount 45,300. Now next entry, next journal entry is after purchase consideration due taken over by partner of an asset, means any asset. For example, here see the furniture were not purchased by new firm. It means furniture purchased by partners. So distribute the amounts of furniture 7,000 between the partner. Then what is a journal entry? Journal entry is partners capital account debit to realization, means realization account credit side. Realization account credit side by realization account credit side by which partners? by Raj, and next is by Sham. By Sham. Amount of furniture. So write down here furniture. Amount of furniture. So write down in bracket furniture. Furniture. How much the amount of furniture? See in the question. How much the amount of furniture? 7,000. So distribute this amount equally between two partners. Means 3,500 and 3,500. Okay, clear? Now corresponding effect partners capital account debit side to realization in bracket furniture, in bracket furniture. How much the amount of furniture? 3,500, and Sham is also 3,500. Clear? Now next journal entry. Now all the journal entries are finished. Okay, first journal entry we prepare asset transfer, liabilities transfer, purchase consideration, or asset transfer. No any asset sold in this problem. No any liability transfer to partners, so don't do the entry. No any expenses is given, so no entry. And now close the realization account. Now close the realization account. How much total of realization account? Do the total. How much total of realization account? 59,300. How much total? 59,300. 59,300. Now to profit. To profit. Transfer to which account? Transfer to capital account. To profit transfer to capital account. Capital account. Okay. Who are the partners? There are two partners in the business. Who are the partners? Raj and Sham. So write down the, distribute the amounts between Raj and Sham. Distribute the amounts between Raj and Sham. Raj. And next is Sham. See how much the profit? Profit distribute between two partners. Profit is how much? 9,650 to the Raj and 9,650 to the Sham. Now transfer this part that now by balance brought down capital account. By balance brought down. By balance brought down. See how much the amount of balance brought down here. How much the amount of balance brought down? Capital of Raj is 18,000. Sham is 12,000. So distribute the amount of capital. Ram is 18,000. Sorry, Raj is 18,000 and Sham is 12,000. Now see here. Now see here. General reserve of Raj and company is given. So this general reserve be distributed between two partners equally. This general reserve distribute between the partners equally by general reserve. By general reserve. By general reserve distribute this partner equally. How much general reserve? 3,000. To distribute part one equally means 1,500. 1,500. Now transfer the profit. Profit of realization transfer to this account by realization. By realization in bracket profit. In bracket what? Profit. How much the profit of realization? 9,650 and 9,650. Okay. Now close the partner's capital account. To balance carried down. To balance carried down. So see here, you can check all the entries are pass or not. You transfer all the assets. Yes. You transfer capital. Yes. You transfer general reserve. Yes. You transfer creditor and bills payable. Yes. It means you pass all the balance sheet to the old, in the books of old firm. Okay. You can check like this in this way. Now tally the, close the partner's capital account. How much total of partner's capital account? Raj is 29,150. 29,150. And how much total of Sham? Total of Sham is 23,150. How much total of Sham is? 23,150. 20,150. Now balance carried down. How much the amount of balance carried down of Raj? Now this balance carried down, transfer to whom? Transfer to new firm, that is Premraj and Company. Premraj Company. This is your new company. So transfer this profit to the new company. How much the how much the amount of balancing figure? 25,650. And here 19,650. Now transfer this account in a Premraj Company by who? By Raj. How much the amount of Raj? 25,650. Next is by Sham. How much the amount of Sham? 19,650. Now do the total of Premraj Company. That is Premraj Company will tally. Premraj Company will tally. It means your solution is correct. Clear? How to check? Check all the entries are passed or not. Check from the old balance sheet. Then your problem easily tallied. Now here we have to solve the balance sheet after amalgamation in a new company. In a new company. Which is a new company? Premraj Company is our new company. So do the balance sheet in a Premraj Company. Liability side. Now assets. See which assets taken over by the new company. Only here now don't see the old balance sheet. Now see the amount from purchase consideration. Which assets taken over by the new company? Premises. How much the amount of premises? Write down here. What they taken new company? Premises. How much the amount of premises? Premises amount is 10,000. Then next, see, when you are preparing the new balance sheet, you have to see the purchase consideration. Next is computer. How much the amount of computer? 12,000. So write down computer 12,000. Computer 12,000. Now next asset is inventory. How much the amount of inventory? 17,000. So write down 17,000. Sorry. Inventory 17,000. Next, see the next asset. Which is the next asset? Debtors. Here we'll write debtors already by deducting the RDD. So directly write down the amount of debtors is 19,000. Debtors, how much? Debtors 19,000. Debtors is 19,000. Clear? Now, next asset. See the next asset. Which is the next asset given? Bank. How much the amount of bank is? 6,000. Right? Clear? Here you have to write the combined amount. Bank. How much the amount of bank? 6,000. How much the amount of cash? Amount of cash is 3,000. See, amount of cash is 6,000. Now see which other assets is given? Goodwill. Goodwill amount is 25,000. So write down the amount of. So write down the amount of goodwill 29,000. So write down amount of goodwill is 29,000. Goodwill 29. Goodwill 29,000. Clear? See here, all the assets are taken over. All the assets are taken over. All the assets are taken over or not? Yes, you return all the assets. Now write down the liabilities. But in liabilities, you have to write first capital balance. Write down then capital. Capital. Whose capital is given? Prem. Next is Anil. Next is Raj. Next is Sham. See how to write the amount of capital now. See, amount of capitals are already given here. You prepare the partner's capital account in Prem company. Write down the amount 14,850, 14,850. This is the amount of capital 14,850. 14,850. Now write down the amount of Raj. See here, how much the amount of Raj? 25,650, 19,650. 25,650, 19,650. See here. Right? See here, partners closing balance, partners capital closing balance, Raj and Sham. So write down the capital balance of these. Okay. Now next is creditors and bills payable, which is will written already in a creditors and bills payable. Creditors and bills payable. How to write the amount? See the purchase consideration. How much the amount of creditor? 9,000. So write down 9,000. Creditor is 9,000. 9,000. How much the amount of bills payable? See how much the amount of bills payable? 8,000. So write down 8,000. 8,000. Now tally the balance sheet. Tally the balance sheet. Total is 92,000. Total is how much? 92,000. Clear? How to prepare the balance sheet is very easy. For preparing the balance sheet after amalgamation, you have to take the figures from purchase consideration, which is we already solved in a last video. How to calculate the purchase consideration? You have to just write down all the assets that are taken over at a agreed value. Means furniture premises is taken for rupees 10,000, computer is taken for rupees 12,000. Whatever agreed values are given in the note, given in the question. Clear? And take all these assets and then take capital balances. How to write the capital balances? From the balancing figure of the capitals account, partners capitals account balancing figure you have to write, and then you have to write the external liabilities which are taken over by the new firms. Okay, the furniture. See here, the assets, that is furniture, were not taken over by new firms. So here we not written the furniture. Clear? Now again, I explain the problem from starting. See carefully. Our question is that is the old balance sheet of two firms, Prem and Raj company, is already given in the question. Also, some agreements, some adjustments are given. For premises, value is 10,000 and computers value is 12,000. Furniture we are not taken over by new firm, so don't write the furniture in a purchase consideration. The assets and liabilities which are not taken over by a new firm, that assets and liabilities should not be written in the purchase consideration. Next is reserve, should create the 5% RDD on debtors. Next is goodwill. Goodwill is not given in the old balance sheet, but here in adjustment goodwill is given, so goodwill write down in a purchase consideration. Next is new firm. Also assume that all the assets and liabilities of old firm at book value. At a book value, if the assets, for example, inventory's revised value is not given, so at that time you have to write the amount of inventory as it is, which is given in the question. Clear? This is your basic question. And now you have to solve the necessary journal entries. You show the necessary accounts in the books of older firm. So for solving the problem, you have to calculate first purchase consideration. Purchase consideration. Now, how to calculate the purchase consideration? First is assets at agreed value. Premises is 10,000, revised value of premises is 10,000. Computer revised value is 12,000. Inventory is no any revised value is given, so inventory is right as it is. The new firm not taken over the furniture, so don't write the furniture here. Next is debtor, should create a 5% RDD on debtor. So whatever amount is given in the problem, see here, amount of debtors is how much? 6,000 less 5%, that is 300. So amount of debtors is 5,700. And next is bank. No any revised value of bank is given, so bank value rise as it is. Cash is also right as it is. Goodwill, new goodwill is given here, so write down the value of goodwill and do the total of assets. Next, B is external liability. In this question, only two external liabilities are given, creditors and bills payable. No any other external liabilities given, so write down the external liabilities. Then do the total of external liabilities. Here also no any revised value of external liability is given, so we write external liabilities, amount of external liabilities as it is. Next is purchase consideration, A minus B. Clear how to calculate the purchase consideration? Now prepare the necessary accounts. Which account? Necessary account. First is realization account. I already explained this part, which account should prepare in the books of old firm. I already given in the first lecture. Realization account, the accounts open in the books of each old firm. First is realization account, second is partners capital account. No any adjustment is given regarding the cash and bank account, so here we not prepare the cash and bank account. If here adjustment is like this, furniture were sold in the market at dash dash rupees, then we can prepare the cash and bank account, but no any adjustment is given regarding cash and bank account, so here we not prepare the cash and bank account. And next is purchasing firm, that is new firm's account. So here we prepare the realization account. Next is partners capital account and new firm account. Then first entry is asset transfer. We transfer all the assets at the book value, means taken these values from the old liability. Next is transfer the liabilities. Third is transfer purchase consideration. Fourth is if any asset is not taken over by new firm, then distribute between the partners. So these, the furniture were not taken over by new firm, so furniture transfer between the, distribute between the two partners. Next, write down the balance brought down of capital balance brought down. Here no general reserve is given for the payment company, so general reserve will not written here. Next is now close the realization account, transfer the profit to the partners capital account. Now close the partners capital account. Whatever profit you will earn, that profit should transfer to the new firm. Here we transfer the profit to the new firm and our accounts are tally. When your accounts are tally, it means your solution is right. Same as you have to solve the necessary accounts in the books of Raj company. So we prepare the realization account. First entry is asset transfer. All of you know first entry is asset transfer. Second entry is liability transfer. Okay. Second entry is liability transfer. From where this amount taken? This amount taken from the old balance sheet. So first is asset transfer, second is liability transfer, third is purchase consideration. What is this? This is a purchase consideration, PC. This is a purchase consideration, corresponding effect in a new firm. Next is furniture were not taken over by new firm, so furniture distribute between the all between the partners. Next is write down the balance, opening balance sheet, opening balance of capital account. Next is here general reserve is given, so general reserve distribute between the two partners. Here corresponding effect of furniture is given. Now close the partners capital account. Now after closing the capital account, transfer the balance to the new firm. So here we transfer the balance to the new firm. So our new firm account is tally. So our new firm account is tally. And next, after that, you have to calculate the balance sheet after amalgamation. Balance sheet after amalgamation, it means liabilities amount, assets amount. How to write it, the amount of assets? Write down the assets from purchase consideration. Next is capital balances, means capital account closing balance of partners. And next is external liabilities amount already written in purchase consideration. So this is your problem. Clear how to solve the journal entries in the books of old firm and how to calculate the new journal entries in the books of, how to calculate the new balance sheet. Clear? First, you have to pass the necessary accounts and how to calculate the accounts, how to find out which account should prepare. I already explained to you. Okay. Same as we will discuss the next problem. Same, we will discuss the next problem on this topic in a next lecture. Okay. Thank you.